Hello, Taki traders. Welcome to our energy report for the 18th of January, specifically looking at WTI, Brent, and natural gas. So let's get right into it and start with our WTI analysis that we've been working on this week. There you can see our trend lines, and it's broken below what we had as our previous trend. I didn't want to make the graph too messy, but we then had sort of bearish trend lines down and it broke them, and then we had upwards and it's broke down again. So it really is interesting where the way the WTI is working at the moment. Personally, I see a lot of upside, even all the technical analysis aside, from the fact that there's just a lot of demand. It's outstripping supply. OPEC with their cuts, the US dollar is strengthening. Whether that will be affecting the price as much or as little really is to be seen. Venezuela is increasing production, but again, their economy still has massive issues, and their production is still well down. So add into the mix of some of the Iranian sort of questions. It's really interesting to see. Overall, I'm long on WTI. I think the overarching story at the end of the day is that the demand is way outstripping supply, and that's going to support prices. It just depends what buying is. Certainly wouldn't be shorting at the moment. If there are pullbacks in the market, that's when I'll look at entering, but I won't be trying to predict when these pullbacks will occur. So at the moment, it's bounced off this sort of resistance level up here, say 64.80. So just under 65, and it's had a pullback right back down to 63.30. When if you look here, you can sort of see where before 63.30. This is the 4-hour fib here. We're actually bounced off that 63, just above $63. So I see that once we get down to this $63 range, and even this wick here, if you can see that, I'll draw a line for it, but probably easy to see. So across there, that to me is strong support, and I doubt it will get to that level. If you're waiting to enter the market for that, you possibly may miss it. Nothing's guaranteed, but just with the price movement at the moment, it definitely, if we zoom in, this is on the 1 hour, as I said, it's definitely finding this sort of resistance. It's just 64.30. Is this sort of the new support at 63.80? And that's not a big trading range at all. So obviously it's trying to decide where it wants to do. There was no real reason for this pullback from a, say supply or market point of view. So to me, that's profit takers. That's the bulls getting out of the market, maybe some shorts coming in to get that price down. And I see upside. So I'm overall long for that. For potential entrance prices, it depends on sort of the equity and where you're at. You could wait for a pullback. There's all chance that it pulls back to this sort of range here. But at the same time, there's a chance that it could just be a bit of a bounce and then it's up again. If I was to draw another trend line across here, that's where you can see it heading towards is 64.50. If you're wanting to short it, not recommending that at the moment. If the US dollar can affect it, if there's some other news, but it's just hard to pick those shorts, and you could be left sort of holding that bag as the price gets back up. So for us, we're long WTI at the moment, and even at the current price, that's for us is a nice long opportunity. Looking across to Brent. So Brent as well, you can see it's had this support around this sort of $69 sort of range on 1 hour fib sort of thing, and again just profit taking from back here. It's bounced off that 68.74 there, but really this is your support here at 69, and again it's just sort of muddling around a little bit. I do wonder if some of the traders are waiting for the American report that comes out. Where are we now? We're 10:30 Australian time. I think it's about 5 or 6 our time, but it's definitely tomorrow morning. So it'll be interesting to see on the Friday trades just what happens with that. So again, we're long with Brent. You can see there is possibility it could pull back to this $69 again, whether there's a bounce. So you could wait to see if there's a pullback, and if there is, long it. Try and short it if you think that the market's going to retract that much, but it's always dangerous. There's a chance that where it is now, it is sort of sitting on this 69 fib level. There's a chance from here it builds support, continues to build support, and then that's what it needs to do to not just hit 70 but stay over 70. That's obviously a psychological barrier, and 75 seems to be, I think, OPEC's sort of target that they would be happy with. So this is likely just a consolidation, waiting for some reports, waiting for some profit takers to get out of the market and the shorts to close, and then I think we're going to see the next sort of rally. I do not see a sustained downward pressure on Brent at the moment with supply and demand issues. And lastly, we go to natural gas. So natural gas, I mean, it's we've had those massive cold events in the US, but I really thought it may go higher than this. I think that the thing of natural gas is you got all this inventory from the oil fields because the byproduct and just natural gas itself. There've been massive inventory draws, but the price, I mean, it's not, to me, it's not spiked up as much as what I have seen natural gas move in small amounts of time. This is on the 1 hour at the moment. It's sort of keeping, is this a resistance here? It's really hard. Probably need to go to the 4 hour to get a better idea for natural gas. So this is where you can sort of see that it's sorry, it's to me it's just very hard to see. You can see the overall trend is up, but knowing what I know of natural gas, that the contract expires end of next week, and then it's into the warmer month. If you are going to long it, I'd be just be careful. If you're going to short it though, again, there's always a chance it's going to zoom up. Probably the easiest thing is I did a long, go to our Twitter account. So what I did do is I did a natural gas long-term chart, and because for me this is probably easier, whereas I'm day trading oil and expecting that to go up, natural gas I'm happier to sort of, I want to wait for a position to short once the contract expires in. I'm not going to get in at the moment. I want to wait till that contract expires in the next week, and then knowing the months. But here's some of the key points we can have when we look at a much larger chart for natural gas. 330, there's quite heavy resistance on that fib line. If it goes into a bear market, $3.12 is likely to become the sort of new resistance point. $2.80 for us is an easy target. I think once the sellers get into the market, getting to that's pretty easy. If you start seeing the market move down, a short down to $2.80 is probably, nothing's guaranteed, but almost pretty probable that will happen. And then getting below $2.60, now we did see it get to $2.58 just before Christmas. So I'm really interested to see what's going to happen. That once this demand fully kicks off, the inventory start rising. I think natural gas, I mean, I saw in 2018 they were expecting natural gas around the 310 mark sustained, but seeing this and seeing what it's doing at the moment, I really think that once we get the warmer months, natural gas is going to break down a lot. So if you are long on it, just keep that in mind, that it's going to need some prolonged cold to give traders sort of a confidence that it's going to get up around that, above that $3.20 plus mark. So it's sitting at 3.223 at the moment. That's on TradingView from Oanda. As I said, I wouldn't be shorting at the moment. I'm not longing it. I'm sitting out of natural gas. But if I do see it hit towards this $3.30 mark, I'll be checking the weather, seeing when the contract expires, and looking at a short then, because realistically, if at the start of the next contract the price is up there, that is going to be a very easy short back to that $2.80 mark. And remember that with on the platform I use on Plus 500, the premium on shorts is pretty minimal. So small equity, short it from there. If it does go up, ride it out. It's not going to cost you much. But being in the market for when it does do that drop, because I think you're going to see a substantial drop in a short amount of time, but that's not next week or the week after. That could be a few weeks away, but just something very to keep in mind if you are in the natural gas market at the moment. So that's what my picks for the moment. As I said, overall long for oil. It's just finding your buy-in and just what's going to happen with this current sort of pullback. Natural gas, as I said, I just want to see if it goes up to around that $3.25 over mark, and they're looking at shorting it, but the trend for that is still up. And on the right here, I've just got the US dollar. Just quickly, I went to analysis, but just so you can see that it's hit this sort of US dollar against euro, hit this sort of technical pullback. And now it's actually making another run, and that will decide what happens with the commodity prices. So happy trading. Follow us on Twitter at Taki Traders, and if you like this video, please subscribe to stay up to date.